Greetings to you all. I am Annu and I welcome you to the presentation on stock data analysis. Problem statement. To predict the future stock behavior so that we can know when to buy, sell or hold them to get the maximum profit. Objective. Objective of this project is to clean and pre-process the historical stock market data set and use statistical methods on it to predict the future stock market behavior. Stock markets are very important as they provide a way to invest money in order to potentially earn a share of the company's profits. Active investors and traders can easily buy and sell their securities due to the abundant liquidity in most major stock markets. According to the SBI report, Indian investors have increased by a whopping 142 lakhs in the financial year 2021, and this increase in the number of investors clearly indicates that the interest that we are getting by the stock market is much higher than that of the other investment options that we have. In this presentation, we will discuss about data pre-processing, data visualization, data statistics, fundamental and technical analysis, and hypothesis testing of the Britannia. We have collected the Indian stock market EOD data 1990 onwards dataset from Kaggle. The original dataset had two sets of data, one having multiple shares from 1990 to 2020 and the other for just 2021. We have done our analysis on one of the shares, Britannia, which has around 6,200 share values on different days from 1990 to 2010. This table shows the first 6 rows from the top of the dataset. The above table represents the last 6 share values from the Britannia dataset before cleaning. The below table shows the general information about the dataset. We have only kept the following columns for our analysis. Date. The date for which the share values are collected. Open. Opening share price in INR. High. Highest price for that particular day. Low. Lowest price for that particular day. Close. Closing share price in INR. Volume. The quantity of shares which actually move. Libraries and tools used. We have used multiple Python standard libraries for data analysis and visualization, which includes Matplotlib for stock data analysis and plotting numerical data, Pandas for importing the dataset, data iteration, concatenation, conversion of data, visualizations, and reindexing. NumPy. We have used this library for storing and working on large matrices and multidimensional data. Seaborn for plotting the heat maps and the box plots in the data cleaning and pre-processing part. Technical analysis for analyzing the different technical parameters of the provided dataset. Data pre-processing is an important task. It is a data mining technique that transforms raw data into a more understandable, useful, and efficient format. The very purpose of the data preparation phase is to turn the data into the best machine learning format, including 3 main phases: data cleansing, data transformation, and feature engineering. This is an incredibly important phase and should not be skipped. The table shows the total sum of null values present in a particular column. This output cell clearly shows that there are some null values present in our dataset. These null values are spaces where no data is present, and it's highly important to remove these values as it can directly undermine the efficiency and the performance of our machine learning model. This table shows the percentage null value content in a particular table. It can be seen that the last trade's deliverable volume and percentage deliverable have null values as 8.56%, 61.70%, 23.99%, and 23.99% of their total data respectively. Imputing the null values in columns where more than 25% data is missing can be misleading to the ML model, so the best way to handle it is to remove the whole column and move with the remaining amount of data. So the trades column has been dropped from the dataset as it clearly had 61.70% of the total data as null values. The final dataset can be seen in the last cell of the above snippet where there is no trades column. A heat map has been plotted using the Seaborn library, and the white region in the heat map shows the columns where null values are present. The above table shows the rows that have null values to better understand the whole scenario. To assign these values, first look at the distribution of the values by column. The following diagrams depict the data distribution type of the last deliverable volume and percentage deliverable. The percentage deliverable data distribution type resembles to be a normal distribution while the other two are randomly skewed. And now we impute the missing values with the mean of the column, and then again data distribution type is checked and is shown in figure. We have also checked the data distribution by imputing the null values by median of the column, and we have plotted it on the same graph as of mean to compare the distribution. The red plot shows the original data distribution, green shows mean, and black one shows median data distribution. From the snippet above, Replacing the values with the mean or median does not make a big difference. So let's replace the missing values with the median of the data set. After we imputed the null values, some outliers have been created in the dataset, so the next step would be to remove these outliers. And now my group mate Shweta will continue from here.
Now I'm going to tell about detecting outlier. What is outlier? A point that deviates significantly from the rest of the data collection. If this is the data collection, then this 2 point will called as outlier. Now we are going to detect and remove the outlier. It is important part of the data cleaning and pre-processing. And we will use the interquartile range method and the box plot visualization in order to detect and remove the outlier which is present in the dataset. Interquartile range method is simply the dataset between the 25% and the 75% of the data, and this area is called as the interquartile range, and this 25% is called as Q1 and 75% is called as Q3. And box plot visualization is simply the help us to see the distribution of the data. This point is called as Q1 and this point is called as Q3. Here the above snippet is shows the interquartile range, means Q3 minus Q1 of the various column of the data set. Now we are going to check all the data point where the value is outside the interquartile range. Here the snippet basically shows the data point where the outlier is present. The false value will indicate that this point is not the outlier, and the true value will indicate that the point is outlier. We are going to remove that outlier point. For removing the outlier, we will use the above this code. Then this is the outlier present in the box plot. After applying the code, this box plot is free from the outlier. The following code has been run and implemented on the to remove the outlier from the trait column. This is applied for the trait column. Now we are going to apply this for the similar procedure for the high column as here it is shown, and for the low column as here it is shown, and it is also applied to the open column and volume column. For the closed column, there is no outlier present as we can see from this snippet, and so there is no requirement for any modification after performing this operation in the data. Now the data set is clean and pre-processed. It is free from null values and free from the outlier value. Thank you. Now my friend Rohan will continue here from.
Visualization is a key component in understanding the behavior of data. It displays the dependency of functions on independent variables, the change of a set of variable with another set of variable, etc. Numerous visual tools exist for understanding the behavior of a given data set, some of which hasn't been used or shown in the presentation, but have been used in the cleaning and obtaining relevant data for our analysis. This technique of understanding data is used by different markets to compute different factors, which may change their decisions accordingly. 6 graphs follow, which shows the close value, the number of trades, the high, open, and low value of stock, and the total volume of stock. It is evident from the graphs that there exists a drastic change in numbers in the range 0,000 and 5,000 to 6,000. This change has been clearly depicted by the method of plotting the data over a time period. Data are the individual pieces of factual information which has been recorded and used for analysis purpose. It is the raw information from which statistics are created. Statistics are the results of data analysis, its interpretation and its presentation, which is followed by the decision-making part for any market. The image shows the number of relevant data entries, which is 6,209. The type of data in each column being an integer type or decimal type, and the emptiness of that cell, either it is a null cell or a non-null cell. Now, Shambhav will take over the presentation.
Hello, this is Shambhavi and I'll explain about fundamental analysis. Fundamental analysis is a method of measuring a security's intrinsic value by examining related economic and financial factors. We search for stocks that are currently trading at prices that are higher or lower than their real value. The current price of a stock may not reflect actual value of the stock. Stock may be overvalued or undervalued in the market. Fundamental analysis is done by using various qualitative and quantitative factors such as companies' revenues, profit margins, return on equity, future growth potential, and other metrics. The main purpose of this method is to identify companies that are fundamentally strong in order to invest in them for longer terms. Moving average are one of the most popular and often used technical indicators in financial markets. It shows the average value of a stock's price over a period plotted along with closing price. The plot here shown is of moving average for 10 days, 20 days, and 50 days respectively. This graph is plotted with the help of Matplotlib library of Python. Now, daily return analysis is used by the analyst to assess the profitability of an investment in detail. It is also used for comparing different investments. For analyzing the risk of the stock, we use pandas to retrieve the daily return for Britannia stock. The output of the following cell of Jupyter Notebook shows daily return percentage along with the days of the Britannia stock. The right side the graph shows the variation of density with daily return. Now, technical analysis is a trading discipline employed to evaluate investments and identify trading opportunities by analyzing statistical trends gathered from trading activities such as price movement, volume, trade increase, exits, and position sizes. It is built on pandas and numpy. It has been preprocessed with the snippets above and data header. Is shown for further technical analysis of entire data set. For example, stocks price may revolve around certain price level. We can create our trade plans according to that. The following code has been run to produce the following output. The table shows all technical parameters of the Britannia stock from the period of 2nd January 1996 to 31st December 2020. From this table, the return, volatility, expectancy, and average trade can be depicted. This graph shows that on one particular date, that is on 14th March 2012 at 12 am, the value of open, high, low, and close were 575.0, 575.0, 560.45, and 567.50 respectively. The volume of the stock traded on that particular day was 1,06,148. The exponentially moving average indicator was 533.32113. The simply moving average indicator was 470.73375. Exponentially moving average places greater weight and significance on the most recent data points. It is also referred as exponentially weighted moving average. Here the right side plot shows the peak, final, max drawdown duration, trades, EMA indicator, and SMA indicator. Thank you. From now on, our groupmate Kamal will continue.
Hello everyone, my name is Kamal and I would discuss the hypothesis framing and testing part of the presentation. We have used the bootstrap method to define our risk parameter for our stock and used quantiles to find the risk value of that stock. We have employed the Monte Carlo simulation, which applies a selected model to a large set of random trials in an attempt to produce a possible set of expected future outcomes. The most common model used is the geometric Brownian motion or the GBM method. The Britannia data frame AAPL is used to demonstrate the Monte Carlo simulation, and we have estimated that for every investment of $159.33 made at the beginning, we are 99% confident that we would face a loss or a risk value of $7.75. To frame the hypothesis, we need to have a complete information on the data set and a rule or a statement to base our hypothesis upon. The problem statement in the stock market is usually, should I sell the stock or not? To base this hypothesis, in stock investment, there exists a general golden rule that we should always sell a stock if it falls by 7 to 8% of its price to cut losses. Now you may ask, why 7 to 8%? This number is obtained just like how significant error value alpha in a normal distribution is obtained through years and years of observation and analysis. To frame our hypothesis, we assign our original decision as null hypothesis that we should not sell our stock and the alternate hypothesis that we should sell our stock. Alternatively, we could say that the null hypothesis is that the loss percent is less than 7 to 8% margin, and alternate hypothesis is that the loss percent is more than or equal to 7 to 8% margin. We have our investment and data loss from which we can calculate our loss or value at risk percentage. It seems that the loss percent is 4.864, which is well below the 7 to 8% margin. Hence, we cannot reject the null hypothesis and thus we do not sell the stock. Now, Rohit will conclude the presentation.
Conclusion of our project using bootstrap method. According to data from National Stock Exchange, there are 1.2 crore active investors in India, even though this number is rising and better from the previous data. Stock analysis allows investors to make informed and data-driven decisions. By using stock analysis, investors and traders arrive at equity buying and selling decisions. Studying and evaluating past and current data helps the investor and trader to gain an edge in the market to make informed decisions.